Welcome back to Rockstock Channel. It is Monday, June 24th, and we're recording the latest installment of our Getting to Know You series from Las Vegas. Rodney and I are about to attend Fast Market's 16th and flagship Lithium and Battery Materials Conference. But today, we have something different. It is neither lithium nor traditional hard rock mining. But it is a big idea that could disrupt how we think about conventional mining for critical materials to power electric vehicles. In fact, it was the subject of a piece on 60 Minutes last night, highlighting this industry as a new arena of U.S. and Western competition with China for critical materials, and used a significant amount of footage from our guest's test collection campaign in 2022, which helped de-risk the offshore technology. The metals company, formerly known as Deep Green Metals, is listed on NASDAQ, ticker symbol TMC, with a market cap of $460 million US, which is less than the $500 million plus the company has spent since inception 13 years ago in 2011. TMC's big idea is to scale nodule collecting from the bottom of the sea and to process such nodules onshore. Its flagship project plans to produce principally nickel, cobalt, and manganese from super high-grade polymetallic rocks in the Pacific Ocean. In fact, Mining.com has ranked two of TMC's projects as the largest and second largest undeveloped nickel resources on Earth. And TMC's SEC-compliant resource estimates show an in-situ resource of nodules sufficient to electrify every light passenger vehicle in America, or 280 million electric vehicles, assuming an NMC 811 cathode chemistry. To be clear, Rodney and I are not strategic advisors to, nor invested in, the metals company. And of course, we are not financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer in this video. But we are substantially intrigued by the company, acknowledging both its disruptive potential and the negative attention from varied actors. Shareholders of Tesla, the most sustainable company in the world, rejected a resolution put forth at its recent AGM, specifically citing the metals company. The resolution sought to commit Tesla to a moratorium on sourcing minerals from deep-sea mining. GM, another forward-looking automaker when it comes to sourcing battery-critical minerals, is also against such a moratorium. In other words, Tesla and GM are supporting the potential for deep-sea minerals to become part of their supply chains. But VW, Renault, BMW, and Rivian have come out for a moratorium. The metals company has recently been featured on CNBC, clips of which are included in this video, and a link for which is provided in the show notes in this episode.
But one organization, the metals company, is forging ahead, looking to become the first to do deep-sea mining on a commercial scale, as a number of other companies continue to explore the emerging industry's potential.
TMC was also mentioned by a popular anonymous poster on X that we respect, at Yellow Lab Life, aka the Koala, for which he said as follows on a recent Money of Mine podcast.
Koala.
Right, Koala. Wait, what's paying for the next set of suits, Cobber?
First, I'll say the metals company.
Wow.
The nodules are there. The International Seabed Authority meets this summer. I think the sentiment in the world is slowly evolving here to the reality that if the West isn't going to do it, China's probably going to show up with a vacuum and suck up these nodules themselves. So it's not like if we don't do it, no one else will. But the way I kind of see it is I think you're going to see markets and the world start to understand this opportunity a little bit better. We need metal. We need it done responsibly. So this is a little bit of a permitting and sentiment play over the next 12 months, and it's a great resource.
As will be discussed and shown through video provided by the metals company, this story is not so much one of a challenging new technology, but more so one of permitting. And there has been substantial momentum on permitting for which we could have a resolution in the next 12 to 24 months, for which TMC, the most advanced aspirant in the space, would be a principal beneficiary. TMC is not alone. This industry is being pushed ahead by some of the world's most credible industrial powers, including China, India, Norway, and Japan, who in the last week announced a major discovery of seafloor nodules in their territorial waters. The metals company has deep-pocketed individual and corporate investors who control some 50% of the share register and continued to follow their money since 2011. After raising over $200 million as a private company, TMC went public via a SPAC in September 2021, raising $138 million at $10 per share. Like most EV-themed SPACs from COVID times, the stock has fallen nearly 85%, trading today at $1.45 per share. Since the IPO, TMC raised $30 million at 80 cents in August 2022 and another $25 million at $2 in August 2023, principally from its main shareholders, Allseas and Andrei Kakar. Since May of 2024, TMC has been funding operations by drawing on $45 million of unsecured credit facilities provided by key shareholders Allseas and Andrei Kakar again, and the CEO, Gerard Brown. TMC has several sell-side analysts covering the stock. Matt O'Keefe at Cantor initiated with a comprehensive note fixing a $4.20 price target, nearly 3 times the current price. Dan Ives at Wedbush, a prominent Tesla bull who appears on CNBC regularly, has a $4 target on TMC. ThinkEquity and Fernley's also cover TMC with price targets ranging from $3.20 to $6 a share. If you have interest in the metals company and would like to see any of these research reports, please email us at rockstockchannel@rkequity.com. Presenting for TMC today is its Chief Financial Officer, Craig Shesky, based in New York City. Welcome, Craig, to Rockstock Channel. Please tell us a bit about yourself, when and why you decided to pivot your career to the metals company, and then Rodney will dig in with his questions.
Sounds good. Appreciate having me on, Howard, and good to see you as always, Rodney. Look, I first heard about this company and the concept of deep sea nodule collection in 2019 when I was on the buy side at King Street Capital, a hedge fund here based in New York. So I've been in finance for a long time. I've looked at metals and mining companies from the investment perspective, really for most of my career. What drew me to this resource was the size and the grade of it. And we're talking here about polymetallic nodules, these little potato-sized rocks, one of which I hold in my hand, that contain, as you know, nickel, copper, cobalt, and manganese. So all very critical materials for the clean transition, for infrastructure build-out, for defense, many other applications. But when you hear deep-sea mining, you sometimes think of the paradigm of mining on land and then putting it underwater and all of the challenges that might come with that. Whereas what we're doing is very different than typical land-based mining. You really collect these nodules, which sit loosely attached on top of the seafloor in the abyssal zone of the Pacific Ocean. So the paradigm of picking them up is far less invasive, and frankly, we feel far more economic than many land-based operations, in part because the grade of the material is so high. It is orders of magnitude higher grade than most undeveloped projects of these metals on land. So when I first heard about it, when the CEO came into our offices to discuss potential investment back in 2019, I was skeptical. I read the resource statements, as I would encourage any of your listeners to do. I would encourage listeners to, view some of the video, the technology that's been de-risked. And after about 9 months of diligence, I, in 2020, set up an SPV to invest in the company when it was private, along with friends and colleagues. And then in 2021, I joined the company full time. So really, I've gone full circle from really thinking that this is something that was intriguing, but had a lot of risks to it, to now actually joining the company. And over the last 3 years, seeing the company hit a lot of milestones that further de-risked the project, despite the fact that the share price is down 85% versus when we went public. And I think that creates a big opportunity on what is the world's largest undeveloped source of battery metals.
That's great. Thanks, Craig, for that backdrop. As you mentioned, the one thing I didn't realize relating to what you've just said is that overall, the seafloor resources for nickel, cobalt, and manganese are substantially greater than land. TMC's got an enormous resource and a nickel equivalent grade of just under 3%. How does that compare to in terms of quantum and numbers versus other projects globally?
Yeah, that's a good question. So starting on the grade, because as you well know, the grade is extremely important. The grade of this material is much higher than nearly any other nickel project on Earth. So it's higher than, let's say, the Norilsk deposit in Siberia. It's higher on average than the nickel laterites from Indonesia, which is about half of the nickel market right now and will be perhaps 2/3 of the nickel market within the next few years. And it's significantly higher than many sulfide deposits that one would find in the US, Canada, or Australia. Sulfide projects typically are 0.2 or 0.3% nickel, with some of those that are being proposed not yet in production. So roughly 10 times higher grade. So we just have to move fewer molecules to get the same amount of metal. That means the impacts are generally lower, whether you're looking at CO2, waste, or tailing. It also means that the economics are quite attractive. And we can actually take these nodules off the seafloor and bring them to places where the processing infrastructure already exists. That's a major cost. In terms of the size of this resource is also an order of magnitude higher than almost any other undeveloped project. In fact, in the Clarion-Clipperton zone of the Pacific, which is really the Goldilocks zone of where these nodules occur in very high abundance and have the nickel and the copper that really drive some of these economics. In the Clarion-Clipperton zone alone, there's estimated to be 3 times more cobalt, 1.8 times more nickel, and 1.2 times more manganese than all known land-based reserves combined. So that's not coming from TMC, that's coming from the U.S. Geological Survey, which released that in 2021. So no matter how you slice it, people recognize the Clarion-Clipperton zone is a place of increasing focus for these critical materials, and TMC controls what we feel is some of the best ground within that area of the Pacific Ocean.
Absolutely. So, I think part of the issue is again, people visualizing what happens on land and then picturing that on the seabed, but there's different seabed, mining techniques versus nodules. Can you describe and compare the nodule collection's low impact and disturbance rather than other deep sea mining methods that require disrupting or actually even cutting the seafloor and land mining?
Certainly. And you can rest assured that, many of the opponents of this industry like to paint everything with the same brush and make it seem like all deep sea mining is bad. This is black and white. Just like on land, there are some projects that are acceptable and some projects that are not. It's the exact same thing in deep ocean. Of course it is. There's a wide spectrum of impacts depending on the method that you're pursuing. Now, in the past, there have been attempts to commercialize other types of deep sea mining, such as seafloor massive sulfide and seamount cobalt crusts. Those are the two main other types of deep sea mining, SMS and cobalt crust, compared to deep sea polymetallic nodule. TMC is only focused on the development of polymetallic nodule resources. But you would see very credible players, including the country of Norway, just voted in favor of allowing seafloor massive sulfide and cobalt crust exploration within the territorial water. But those types of methods would only go forward to the extent the environmental impacts were well studied. So Norway's really embarking on the first step of many that might take them to a place beginning to extract these metals in their territorial water. The key difference, however, is that the nodule that we're going after are not attached to the seabed. They are little potato-sized rocks sitting unattached on really what is the clay, the abyssal zone of the Pacific, and you put them up like a large vacuum cleaner, and then they ride up on a riser pipe 4,000 meters to the vessel on the surface. It's very similar to the approach done in the 1970s by various companies who successfully lifted thousands of tons of these nodules. Companies like Lockheed Martin, BP, Shell, Mitsubishi, Sumitomo. The other types of deep sea mining do require the separation of the ore from the substrate. They require digging and drilling and sometimes blasting underwater. Oftentimes, those who are opponents of this industry will talk about it and then show pictures of what kind of that technology looked like, machines with big scary teeth. That's not what TMC is using. TMC is using a collector vehicle that shoots a hydraulic jet of water over the top of the nodule, and it sucks up these nodules into the hopper, and then it rides up on compressed air to the surface. Much less invasive, frankly, than other types of deep sea mining, but also much less invasive than most other mining on land. And in fact, we have life cycle assessments from Benchmark that compare all of the impacts of land-based mining to the collection of nodules in our first contract area. And what they found was every single impact category they measured, including waste, tailing, deforestation, CO2 emissions per ton, nodules were the lowest impact in every single category for nickel and copper. So we feel a lot of the knee-jerk reaction that some might have against this industry is based on, confirmation bias where they think it must be bad. Therefore, let's look for reasons not to support it. When in fact, we view this as a huge net positive to the planet, because a ton of metal that's coming from here is a ton that doesn't have to come from more invasive sources.
And on that topic, there's been public support from the U.S. National Defense Authorization Act and its stance on seabed mining. They've publicly come out. So how influential could their support be?
That's a good question. We think it can be very influential, but there's an interesting political dynamic at play where in order to get access to the resource of nodules in the Clarion-Clipperton zone, one must be a member state or sponsored by a member state within the International Seabed Authority. So just a quick bit of history on this. In the 1960s and 70s, there was interest in picking up these nodules in the Clarion-Clipperton zone by some of the companies that I mentioned, some of which are US-based companies. However, the United Nations stepped in and said, you don't have clean legal title to this asset. We have to establish rules for the international water resources. So most of the companies packed up and did something else while the United Nations came up with rules to govern the high seas. So that first step was the UN Convention of the Law of the Sea in 1982, which then was the leading catalyst for the formation of the International Seabed Authority in 1994. That International Seabed Authority is the group that has been regulating the high seas since 1994 and coming up with a legal regime to allow deep sea mining to occur. The U.S., however, never ratified the UN Convention of the Law of the Sea, and therefore is not a full member of the International Seabed Authority. And this was actually the focus of the 60 Minutes piece that ran last night. Why is the U.S. ceding ground in this area when China and others are pursuing deep sea mining so aggressively? But because the United States has not joined the ISA as a full member, the only way the U.S. can get access to this resource in the Clarion-Clipperton zone is through companies like TMC. So TMC is NASDAQ listed. We're a Canadian company, but nothing precludes us from taking these nodules off the seafloor and delivering them to the U.S. for processing, or even more likely, first taking them to Japan for processing at an existing facility, Pacific Metals of Japan, with whom we have a binding arrangement, and then bringing that intermediate material, effectively like a concentrate, to the United States for further refining. So this is a long way of saying the U.S. has been on the outside looking in. What you've seen from the National Defense Authorization Act are the first dollars attached to U.S. work on this space in terms of doing feasibility work on that refining of nodule-derived feedstocks. So while it's a small first step, it's an important first step, and we hope the first of many that will lead an increasing large flow of dollars from the United States to this new industry.
And on the going back to the opposition, I looked at it a bit in terms of what's been out in the public domain. To be honest, I understand the emotive side of it, but I'm struggling to see solid scientific research backed to block deep sea mining, like in particular the lifting of nodules. Is the opposition's argument based on it's not zero impact and zero carbon emissions, therefore it's bad? Or was it I saw something that's, land mining won't stop, so this is just simply adding to the existing emissions. I'm not sure that's, grounds, that doesn't, I'm not sure I understand that logic. Is there something substantial, that they have up their sleeve, or is it really a case of it's all bad because it's underwater?
It's the latter. They say it's all bad because it's underwater, and that's how confirmation bias works, where people have an initial emotional reaction and then they look for reasons to satisfy their initial view. And I think a lot of the science done on this that has been cited, and I would challenge people to check the dates on it, mostly 2020 and earlier, where it was basically a lot of speculation on what the impacts might be. Anybody sitting at a desktop can come up with a model to say, here is this impact that could then lead to a catastrophic butterfly effect. And we don't know enough, so we should never do it. But we do know enough to know that, let's all stop now and cease the research. What we've actually seen in the last few years, instead of speculation, which is a lot of the modeling that has led to some of this environmental opposition, we're now seeing in-field observed data, actual tests being done where you have assets in the water, we collect the nodules, and then we see what happens. And in fact, we've had an environmental and social impact assessment that we've now spent nearly $200 million on over the last 13 years. And that's really spearheaded by researchers who are free to independently publish. Well, TMC pays them, but it's their research and they're able to publish freely in peer-reviewed journals. And what we're finding is that the main potential impacts cited through speculation, and that's what you often hear in the media, is the speculative research. Those have been disproven now by actual in-field observed data. The main potential impact people focus on is the plume, the sediment that gets kicked up when we pick up these nodules off the seafloor. There are those who have speculated that that sediment might travel for tens of thousands of miles. Now we know, including 2 to 3 studies from MIT over the last couple of years, the plume of the seafloor rises generally no more than 2 meters. 92 to 98% of that plume stays within 2 meters of the seafloor and settles within 24 hours. So some of the chicken little skies falling type of speculation has been proven to be wildly inaccurate. But we would also say too, this is such an important linchpin for the clean transition, getting the metals required and frankly supplying metals like nickel or cobalt that would otherwise come from potential adversaries of the West, namely China and Russia. If this is such a huge resource, why are we afraid to start even with one ship? TMC will start operations with one ship, eventually adding a second collector vehicle to that vessel, and we'll be reporting our scientific information in real time through a digital twin, an AI-based system that uses adaptive management to actually keep guardrails on our operations and show everybody where we are and what the impacts are in real time. So we would suspect those who are truly against this industry don't want it to go forward because they realized the science is now showing this is going to be far more benign than what was previously speculated.
And as you mentioned, you've spent, 200 million on environmental impact. So you've put down some hard dollars, and that takes us on to the collector test that you conducted and the downstream testing that followed. A lot of this data comes from that collector test.
That's correct. That collection test was done in late 2022. But importantly, it wasn't just that test. We actually had another scientific vessel filled with researchers who were measuring the seafloor and the water column above it before, during, and after that collection test. That's also following many years of environmental baseline data, where frankly, we put assets in the water and we just observe what is in the area. What does biodiversity look like? What we know is that in this area of the Pacific Ocean, it is so deep and dark in this abyssal zone. Most life occurs closer to the surface. Most of the life by biomass on the seafloor is actually bacterial in nature. But really what we learned from the collection test was also driven by what we found 1 year following that test, when we sent a ship back to that area of the Pacific to see what does the environmental regeneration look like. And the results were very encouraging, with life coming back quite robustly in the area of the collection test. But not only was that helpful for our environmental impact assessment, it was helpful because we were able to show we could collect nodules at scale. And in fact, we collected 86 tons per hour at peak production. We anticipate that would get up to about 400 tons per hour. So even 86 tons per hour, that's about 40 Tesla Model S vehicles going up a riser pipe every hour. That's a lot of material. And we anticipate when we add a second collector vehicle to the system, we will get up to 3 million tons per year, which at current metal prices would approximate 1 billion of revenue to TMC. So it is a very big scalable operation. And it was important to show people that, yes, while this is similar technology to what was done in the 1970s, while we're using existing offshore oil and gas technology, that's helpful to keep us very capital light. But it's also showing that we're able to do this at scale commercially. And that was a very big de-risking move for our company.
It's out of interest because nodules is something new for many. What is the typical recovery rates of the nodules that you pull up and then process into the end material? How much do you recover?
Oh, it's a good point. If you're going from what is the total resource on the seafloor, and then you have to multiply it by a few factors that reduce it down. Because out of 1.6 billion tons of nodules on the seafloor, we're not going to pick all of them up. Some of them will be in areas that are less dense together. So there's going to be a percent that just stay on the seafloor. The areas where we are doing the collecting, it's well over 90% in terms of the number of nodules that are picked up. And in fact, nearly all the nodules exist on the seafloor. They're not buried. So anything that would be below, let's say 2 inches of sediment, we're not going to be touching those either. Once the nodules are brought up to the surface, they then go through a dewatering process, and then they're brought to shore via bulk carrier. And we process them through a rotary kiln electric arc furnace line. Once you produce that material, and then let's say you take it all the way to nickel sulfate and cobalt sulfate and copper cathode, and we've shown that we can do all of that, the ultimate recovery rate for the nodules and getting those representative metals is above 95%. So it is a very efficient process. But by nature, we don't want to pick up every nodule. We want to leave some behind. And we also know that the regulator is setting aside a large proportion, in fact, already 43% of the Clarion-Clipperton zone as a no mining zone, areas that will never be touched, to ensure that some of the life forms, including bacteria that do exist on the seafloor, have plenty of places to thrive. But yes, overall, the recovery is very economic and quite substantial.
And then if we move on to the economics and the feasibility, you've adjusted the planned model slightly materially because you're now looking at a capital light formula, which is far more doable than the original model. You know, the numbers are far less. Can you elaborate a bit on the latest Capex estimates and whether there are potential avenues for the metals company to raise that amount without equity dilution?
Oh, that's a good question. And I think the answer is yes. We feel we are able to do a lot of this without, material topco equity issuance. In order to actually launch our application to the regulator that would allow us to go into commercial production in early 2026, we need somewhere in the ballpark of another $40 million. That's consistent. That's been consistent for us nearly the last year now in terms of the quantum that needs to be raised. So we've been pretty good at keeping everything on time and on track. But that's really to finish our environmental impact statement, to finish our pre-feasibility work, and then launch that application to the regulator. And look, in terms of the Capex required for the vessel, we have a partner in Allseas that's been willing to put up a lot of the capital necessary to do modifications on the vessel and keep us in this very capital light approach from the TMC perspective. So the overall vessel modifications will be in the low hundreds of millions of dollars, and we anticipate there's going to be some sharing of that upfront Capex between us and our partner Allseas. The exact details of that would be laid out for us in our pre-feasibility work, which we anticipate to publish later on this year. So I would say be on the lookout for that in terms of that PFS work coming. But we are quite convinced that at current metal prices and even with a healthy margin of safety, we are going to be profitable even from the first vessel on this operation. So really, instead of typical operation of this size where you're talking about many billions of Capex required, and most of that has to be raised after you get the permit, TMC is talking about low hundreds of millions, and most of that doesn't have to be raised through equity finance, and it's not something that we even necessarily have to do until this regulatory certainty comes from the International Seabed Authority. We can wait until our cost of capital improves, and anticipate doing some of those modifications as we get closer to commercial production. Keep in mind, one of the key elements of this capital light approach, because we're using existing assets, once we get the permit, if you got a permit on land, you still have to do 3 to 4 years of build out and have, multiple billions of Capex risk, execution risk. TMC doesn't have that. Once we get the permit, we can be up and running in a matter of a few months rather than a few years. So that is a big differentiating factor, and why we think, frankly, it doesn't make any sense that we are trading only at 4 or 5% of the underlying net asset value of our first block.
So on that, you mentioned it, you've had some major backers in the past. You've got Allseas involved. Are all of these major players still prepared to support the project and its funding, as you go forward if it's needed?
Yes. Every single time that we have asked our largest shareholders for support, and our 3 largest shareholders are Allseas, a private company based in the Netherlands that's frankly doing some of the most impressive construction vessel work in the world. They also do a lot of deep ocean pipe and cable laying. They are an 18% shareholder. Our largest shareholder, the family office of Andrei Karkar, he is a board member. He's 20%. And then our chairman and CEO is nearly 7%, Gerard Barron. All 3 of those have participated in nearly every equity raise we've done. They've also provided unsecured credit facilities to us on a very, I would say, attractive basis for a pre-production, pre-revenue company. So every time we've had to call, they have answered. And that's allowed us to raise funds in a manner that one wouldn't expect for a pre-revenue company. In fact, we were able to raise $25 million this past August at $2 a share. And that was announced when the share price was $1.10. It's very rare to do a capital raise at a significant premium. So we still think we're trading at pennies on the dollar compared to where the fair value of the asset is. But we have had the good fortune of relying on very deep-pocketed shareholders. And a lot of people would say, why hasn't Tesla bought you? Why hasn't Glencore bought you? The answer is, we know what this asset's worth. And, of course, we are fiduciaries managing the company for all stakeholders. But when your three largest shareholders have that committed faith in this operation and know where this upside is going, it makes it easy to call them when we do need the limited amount of funds required.
So we get down to the real nub of the issue. Really is, you've got a massive resource. It's got a big NPV. When you take in all of the commodities that are in each nodule and bring it down to a nickel equivalent price, it's very low. So it should be competitive right the way through the cycle, pretty much no matter what happens. But the crunch comes down to, when is the ISA going to, what's the likely timing on giving exploitation permits? I know you've put it out. Is there any change on when you think it's likely to be issued?
No change. Since the summer of last year, when the ISA announced that there would be an extension on the amount of meetings required to finalize their mining code, that's what this industry is waiting on. This mining code that was really going to be scheduled to be delivered in 2020. Then it was delayed for a couple of years as the ISA effectively shut down due to COVID. Now they started ramping up again. And while there has been a push by some opposition states driven by global NGOs, the strong momentum is actually being carried by very large, populous, credible countries such as India, Japan, China, even more interest now from the United States. That's really where the momentum's coming from. What the ISA said last summer was that they would intend to finalize the mining code and then adopt it at some point during their 30th session. The 30th session means 2025. So they said that last year, and we feel they're going to hit that timeline. They have another meeting coming up next month where they're going to make further progress on the consolidated text of their mining code. But really, we're at the final stage of negotiations where, you have a red line of a very long document, and lawyers and counsel and countries are going through it and, sharing markups and making comments, but we're getting very close. And frankly, the ISA has a mandate to deliver this mining code. They're not being asked at the 11th hour, hey, should this happen or shouldn't it? Much as some NGOs would like to paint it that way. They have a legal mandate to deliver this mining code. And we anticipate that they'll hit their target that they laid out last year, which is delivery of that code in 2025. Now, TMC does not have to wait for that code to be in place to launch our application. There is a 1-year review process on our application, and we believe that we'll have that review done, and assuming a 1-year review, we'll get the permit to begin operations toward the end of 2025, putting us in commercial operations toward the end of the first quarter of 2026.
And you mentioned China. What is it? And they've definitely got more involved. I see they picked up some in terms of the exploration permits and so on. What is it that China is advocating for?
China is a strong advocate of taking a pro-contractor position at the International Seabed Authority. So they are pushing to have the rules done and get them finalized so commercial operations can begin as soon as possible. Even though the TMC has about a 5-year head start on the Chinese contractors, China has been using their sphere of influence at the International Seabed Authority to push the regulations ahead and frankly remove some of the roadblocks that more obstructionist countries have been trying to put up. So look, China has designs on this industry, not only for, getting the metals, but as the 60-minute piece noted last night, there are some potential defense applications and military applications that they're interested in the deep ocean as well. That in turn had led to the great interest of the U.S. Department of Defense and other Western governments. So this is going to be a key arena for West versus China supremacy in critical materials. One of the things that China sees in it is an opportunity to become less reliant on foreign sources for feedstock. Most metal processing and refining for some of the critical battery materials we talk about, that occurs in China. But not all of the underlying feedstock comes from China. A lot of it comes from places in Africa or Southeast Asia. So this for China is an opportunity to have direct access to the underlying high-grade material. And that's why they're very interested in it. In fact, Chinese companies, China Minmetals, Beijing Pioneer, they submitted environmental impact statements to the International Seabed Authority to do collection tests in 2025. That would be analogous to the collection tests TMC did in 2022. We've also done many years of environmental work. We've done our resource statements. We are just further ahead than any other contract by quite a wide margin. So as Howard noted at the beginning, we've already spent roughly $500 million on this project, and our market cap is less than what's already been spent. And that money was very well spent going to the de-risking of these future operations. We think that presents a very good opportunity for anybody who wants to get into a new industry right as the starting bell is about to ring.
Which again starts to make sense why the US defense sees an opportunity here where they get the jump on China for once, given where you are.
We think that's correct. That's absolutely right. And I think, if you look at nickel, yes, a lot of it goes into batteries, but a lot of it goes into stainless steel. There's also a large portion of demand in aerospace and defense and electroplating. Every single metal that we be producing, nickel, copper, cobalt, and manganese, is listed on the U.S. Geological Survey list of critical mineral. There's a reason that the USGS has been looking at the resource. There's a reason that, in fact, the U.S. agency NOAA, National Oceanic and Atmospheric Association, was studying seafloor nodules intently in the 1970s. They actually reported on this study to the U.S. Senate in 1995, stating that other than the seafloor plume, every single environmental question about deep sea nodules was answered. So now we're seeing some people trying to play revisionist history, making it seem like this industry is being rushed forward. It's quite the contrary. This is a natural progression of about 50 plus years of research, and all of it's showing that this industry will happen. It's inevitable. And TMC is the leader in the space with some of the best ground in the best neighborhood.
Thanks, Craig.
All right. Thanks a lot, Rodney, for all those great questions. And Craig, fantastic story. What the $500 million, did you describe, or can you describe, what was that spent on?
De-risking, and de-risking. It was effectively resource statements put out, taking those resource statements mainly from inferred, now for our first contract area, from inferred to indicated and measured, putting out our initial assessment in 2021, doing the test mining that was completed in 2022, doing our test onshore processing program, where we're showing we can take these nodules all the way from the seafloor into the nickel sulfate and cobalt sulfate precursor materials that would go into batteries. And finally, about 200 million of it was on environmental research. So overall, I would say out of the 500 million, think of it as about 200 million for environmental, another 200 million for a combination of resource definition work and test mining and processing. And then, the other 100 million for various sundry expenses and SG&A.
Okay, great. And just for the viewers' reference, an RK Equity a long time ago, more than 10 years ago, did work with a predecessor company that was in the seafloor massive sulfides project, which was Nautilus Minerals, which didn't work. Some of the founders of your company have had some experience with that, but the nodules distinction is very different here, not only from an environmental footprint point of view, but also in terms of the ease of lifting it off the seafloor and then just moving to process it. Okay, look forward very much to seeing all these permitting milestones that are a major factor over the next kind of couple of months, or maybe 1 to 2 years. Thanks, Craig, very much, and look forward to speaking with you again in a couple of months.
Looking forward to it, Howard. Thank you, and thank you, Rodney.